Good morning, my friends, and welcome to The Breakfast Club. My name is Darren Hancock, and I'll be your host today, working towards the ultimate trader, the ThetaWave Trader. That's what we're looking for, and I hope you guys had a wonderful weekend this weekend. I had a lot of fun working crypto this weekend. I've never done the crypto market ever, and that Leap account I mentioned in my previous shows has grown quite significantly this weekend. I think I managed to get it up almost 20K in one day. It was like 24 trades or something like that, with a 60% hit rate. Not a great hit rate, but more success than failure. Did lots of experimenting, but there were some really clean setups happening in crypto, so I was really impressed with that. I just had a field day. There was some real banger trades, so I'll show the account when I'm done. My objective is to try and double it in a month. Crazy, I know, but I want to try and destroy the whole 6% idea and try and double it in a month. So 60% so far, and we're only just finished the first week, so it's a bit exciting. I'm finding it exciting. But anyway, let's get back to the other stuff. First, let's make sure that we're I guess we're up and running. And I miss my buddy Kirk being here every morning. He's not here. I haven't heard from him in weeks now. Kirk, if you're out there, thinking about you, buddy. Abs, good morning. Good morning. I miss Kirk not being the first one here. Hope he's okay. Yeah, it's strange. You remember when he was just so... He absolutely loved it. He said, I'm never going to stop watching this. I absolutely love your show. And he was making money. He'd done his funded account. He was getting like a couple of grand coming in. Like he saw the light, man. He saw how good this stuff works. And then suddenly, bang, he's just nothing. He's not saying a thing. And he hasn't been here. So, yeah, it concerns me. I hope nothing has happened to him. I hope he's just suddenly decided, I got this, and he's off on his own, and he's just making, his life is happy, and he's making himself millions of dollars and helping people and living the dream. That's how I'm going to picture it. That's how I'm going to picture it. Unless somebody hears something and we can help his family out, or I can help his family out in any way, then please, someone let me know. Thomas, good morning. How are you? And Christian, did you not have an awesome day the other day? I hope you had your weekend followed in suit, my friend. It's good to have you in the other day. It's good that your wife was sharing some of your success with you. She was enjoying some success with her trading as well. So did you see the title of my of our show on Friday? It was Christian Gets the Girl. It was great. So yeah, let's get into this this morning. I'll try and read through these as quick as I can here. NASDAQ, I'll spend some time on NASDAQ in a minute. I got some ideas on NASDAQ. Yes. Yeah, just slowly making new highs constantly, hey? I'm looking for a return back into this order block here one more time before we go north. If we roll over now and get below this, if we start closing below this in this candle, we're going to keep an eye on that, because this now becomes an important pivot point. We've got relative equal highs, so I think they're not going to leave those untouched. So we'll see how it acts off this order block here. We got a lot of liquidity up here to be hit, usually you'll see this consolidation occurring here. Manipulation is to the downside, and then we come back up and start hitting for all this liquidity. This would be the 920 area. So we have Cam 1 model right here. Manipulation to the upside. Drop down, come into Cam 1, Cam 2, and then 50% of the leg that takes out the high of the consolidation, which would probably be somewhere around the beginning of Cam 1 again. So we see how that works. Or this ends up coming back down into here. There's a Cam 2, which would be inside that BTC to continue to take liquidity on the upside, because we've got relative equal highs up top here still. A lot of pool of liquidity sitting in here. Equal lows. Then definitely not going to leave those untouched. So YM, Dow Jones, now we finally broke below this. This to me is a signal that we've got some downside coming, and if ES has a signal for a potential downside turn, NQ, I'm going to double check NQ, but one of the three has already made its intentions known to go lower. I think Dow Jones has got some more low activity. We're traded back inside this BTC right here, and now we're looking for more downside. These lows here start working back into this level down here. This might be the one to play in today. Dixie's retracing. We've got a nice little swing. We've definitely drove down, hit our objectives that we were looking for earlier last week. We've hit the objective perfectly off the top there. And we've come all the way down into this block and right into a Cam 2 model. Take 50% of this range here, and you'll probably find it'll end up right here inside that little tiny price imbalance. Ideal place to turn around, come back up. So now you're between this consolidation. We broke down to it. You come back up, you might find support at 1 or come back into 50% of that range, which would put you right at this like array to like array, right? So look at this one here for upside. If we continue to run up, look for there, and or just above that into this low here, and that will cause us more downside on the other currencies. So we're expecting more downside. We've got big pockets of liquidity here. We finally ran out all the highs that we were calling for last week, so that prediction came true. It came together nicely. And if you caught this box here when we were calling that 26 to 29, it's 300 pips. That's a nice dandy little 1, 2, 3, 4, 5, 6, just over a week, a whole week of fun and delight for you. If we took our call from here last week, off the 4-hour fair value gap, we wanted to break above that. We got that. I wanted to see it return back to the daily fair value gap. Didn't do that. Just opened up and just kept going for the rest of the week. So we're going to see a retracement now. Now that we've got into the rejection block here, again, we didn't take the highs there, but we did get to the rejection block again. So here's another example of make sure once you've scaled out along the way, if you can't get those double highs, even though you say, yeah, absolutely, they're going to hit them, scale yourself out a portion of the rejection block, because here's an example of all your profits getting eaten up now. If you're trailing your stop loss to the bottom of the daily fair value gap, you've got profits getting eaten out here without taking some money off the table. CAD, as the dollar starts to make its way back up again, I start to look for this stuff here, these equal highs here now. We've got lots of liquidity sitting above the market right here. So this could be just a run on liquidity down below, inside the daily fair value gap. Pop out, find some support, look for continuation on the upside, and look for these equal highs, see it taken. Consolidation. See, this is kind of like the manipulation we're talking about this morning. I want to see this consolidation happening on the 1 minute chart in ES that we were just talking about, but you saw it starting to roll back up. This is what you wanted to see right here. With this consolidation, see it roll down, take out the lows, this little low portion of it, and then start running back up into the range for New Zealand. So we were calling for it to come back up, fill this, and then you had to keep your eye on the breaker, or sorry, on the regular order block, and it would be this little tiny guy right here because its body's higher than that one. We went all the way through that, and we still didn't take out the highs. So rejection block, deep in the rejection box, makes relatively equal highs, but did not take out the high, and then retraced all the way back down. So that is 62 100 to 61 760. So you've got like 40 handles, 20 40 60 handles, or 60 pips of drawdown from your, where you could have taken out right here at 61 62 and come back 30 handles. You could have made yourself 30 extra handles. So look for 50% of this wick. If we take out 50% of this wick and continue to the upside, look for those old highs to get taken and a refill of this fair value gap on the other side. So keep your eyes on that. Lots of consolidation around the 15-minute mark. Aussie dollar acting a little stronger. You see that? Break through the week or the inversion. I'm going to have a little coughing fit. Hang on a second. You don't want me coughing in your ears all the time. So you see how we have a break through this fair value gap, break through the consolidation to the upside, come back down on top of the fair value gap inversion. Now you want to find some support of this and start pushing back up. Again, reaching for this higher liquidity above the markets here. If it decides to continue to drive through this inversion, look for your, if this is your big, if you're looking at that as your larger area consolidation, look for 50% of that, which will put you back into the breaker again, a breaker again down here. Take your range, split it into 50%, look at your fib tool on the way down, look for things like this. We do have a swing point here. Look for this order block, see if that holds price back at these equal highs here. Look at that high, see if there are areas that will provide some support, and where do they fit in terms of your PDRA matrix. Are they a premium or discount? So there's some things to keep in mind there. And Japanese yen, look at that. How delicious is that for the yen? Good for you guys. Japanese yen recovering quite well. We've already dropped 400 pips for them, almost 360 at least. So good for them. 340 maybe. We're through this fair value gap here. The body broke through it here, and you didn't get a pop back up to get a run down on that. You just broke down and just kept going. Just great. So we're through. We're into the mean threshold of this breaker here right now. It's a senior candle, so we'll see how well that holds inside this fair value gap. You want to see it get back up above this, close back above this today. the wick does the damage. You want to see this come back inside here, which should happen if the American dollar starts to gain some strength back again. We'll start looking for looking to dig back into this liquidity that's just been on the downside. Oil. Yeah, that's why I was afraid of this. We have a consolidation, manipulation, driving prices higher, giving people this false sense that we're going to take this higher. We have a fair value gap that forms when you break old highs. The body breaks down below it right here. This gives you the indication that we're on the sell side now. Body closes below that inversion, and look back, look at this. We eventually close back into it right here. That's where you'd get short. Now, I'm not just form fitting this. We're going to show you this setup over and over and over again. That was the majority of the setups I used in Bitcoin on the weekend. And it works just amazing. Right there, you want to see a body get below it right here. 1, 2, 3 attempts to get short. And from there, I love you, honey. Have a great day. I love you. Enjoy your work. Text me, let me know you get there okay. So you get multiple attempts here to get back into that range, and then as soon as you tap it, that's an entry, entry, entry. So you get your entry once, twice, 3 times here, and I don't know about you, but that's 50 cents on a 1 minute chart. That's huge money for you. Aiming for your first liquidity at rejection block and lows, and then digging down into the mean threshold of this candle here. Look for also the rejection block further down, these equal lows, and this fair value gap below price here. Unfortunately, this could be the big dig down into March now, looking for a run on this liquidity. So keep that in mind, as this could be just a continuation down into clear out all these lows here. Again, it's another great opportunity to get short on oil if things pan out the way they do. So this is the 20-minute. This is where lots of things start to shift around in the market. I was making a bunch of every time I pull a line now, I've got words I can attach to it, so I've made a bunch of templates as well, so I don't have to keep trying to type them all in. I can just slam it, right click it, call it what it is. Get rid of this thing. We're still stuck inside that inversion right now. See how that equal lows? There's a ton of liquidity sitting there in gold. So you want to see the same thing I just pointed out to you on the previous one. We have a body that gets below it, comes back up. Again, your stop loss has to go above the high. So I got in here right on that yesterday, and I put my stop loss right above it. I thought, well, that's it. I don't want it to go above it. If it does continue above, I'm not interested in being in it. So I have my stop loss super tight. It took me out, obviously, but it still falls within the parameters of that becoming the drop down. So if the American dollar suddenly goes down, up again, we're going to see some downward pressure on this gold, and it's going to reach down for lower prices, run down below these equal lows here, and start digging deeper into this wick and fair value gap. And then there's a ton of liquidity down here still. So I'm a little bearish on gold right now, just because of our initial setup. We've run into the rejection block. We've come back, found some support at this order block here. Found support at that order block right there. So you see how we're slowly stepping down? Again, a lot of people say, Darren, that's just consolidating. And it is. I agree. On an hourly chart, keep your eyes right here. So take that. I should just leave that on there right now. Let me just leave that on there right now. keep your eyes on this piece inside gold. You want to get on the body of that downside. Get one tap. You may get one tap at that on the way up, and then start looking for the liquidity on the downside. Start cleaning out some of this stuff. If you get a false manipulation down and then it books up above it, look at that as CAM 1, 2, and 3 entry models that are forming. When you get a body above that and it sits on top of it and then starts to climb on it, for me, you'd have to be bullish again. You'd have to get above that high there, and obviously that high. Not just like little wick runs. I think if we get above this one here and find some support with some bold candles, then I changed my mind. We're still aiming for the carat and silver. Still looking for this fill. So far we've called this perfectly. We called this a few weeks ago to enter into here, this whole run up, and we are literally moments away from hitting our objective and digging into the carat. So look for that. Copper is the only one that hasn't been acting the way I would have expected it to do. Otherwise we got everything else right. I like this. This is the same setup I gave you guys on oil. Here's the same thing in reverse. Look right here. So yeah, we have a low taken out here like this. There's a fair value gap right here. We run above it. There's also a little tiny one in here. We come back down, fill it. Look at that, right there on the money, and then we break away. So you're running for these highs here and running for higher prices here. So look for these inversions to give way, to go higher back into the original order block, which is, forget that guy there, go with this one. He's inside that one. So that's your upside objective for palladium, if you're into palladium. I'm telling you, these things work on every asset class. If you have a theory about how markets work, if it's not playable in every market class, every asset class, every candle set, in other words, minute, hourly, whatever, it's not algorithmic as far as I'm concerned. I know it's a bold statement, but if it truly was algorithmic, and algorithmic works on everything, if you've got it working on one, it should work on everything else. It should work on absolutely everything else. Okay, we got 3 more minutes. You're not into the banks, Canadian banks, so let's get back to liquidity. So we're looking for here. I've got this one and the daily fair value go up top. So we're right in the middle. Somebody was asking me to give the Sunday feedback this weekend and say, tell me what you think. I was like, I don't think anything. I like this bottom here and I like that top there, or the top here and the bottom here. That's the range I'm stuck in, and so until we get through these, you're banging off of these 2 daily fair value gaps. So I've got nothing for NASDAQ other than welcome to a pinball machine. So until it shows its intentions, we have the mean threshold of this down close candle, and the up close candle has not been broken to the downside. So this up close candle is, but potentially we've still got more upside. So this up close candle doesn't play any role for me right now. That's just the fair value gaps contained within that. Well, that's weekly. Here, let's see if we can get this. Might clean things up a little, give me some objectives. Okay, now I've got my objectives. I was looking at that weekly going, I'm stuck in the middle of that. So now I have more of a bias. You see, I definitely have more of a bias now, because we have this candle's mean threshold, which is right here. So inside that, which is almost inside this, if I took that from there to there, mean threshold would be just over the consequent encroachment of that BTC inversion here. So look for price to run up into here and then start to roll over, take these equal lows, because you got two sets of equal lows here, and you got a fair value gap daily that still hasn't been filled yet. So if we do have our customary dip down in March that we're expecting, we get a run back up and then a dip down, and then right into April we've got a big drive down into April, and then April to May. So this could be just this consolidation on the daily. We've got overlapping consolidation. So CAM models on the daily, see this one here, and this one here, they're overlapping, right? And I do have a theory. I haven't done it yet, but I have a theory. I've mentioned this before about, oh, there's the open. So that was the manipulation to the upside. We've come back into a CAM1 model here. We're tapping that. If we continue to the upside here now, there's your CAM1 entry. For long, all this liquidity above the market here looks good. Again, if it takes out this high here, look for there's your rejection block. Are you taking a piece off here? The high, fair value gap, or you're just aiming for the highs here and say, I don't care. That's fine. Then manage it from the back end. If you're on this, if you just took this CAM model and you're looking for a run, I'm just gonna go close my front door. Now, are you glad that I mentioned the rejection blocks again? If you did take that CAM model right to the rejection block, take some off, because now you're right back into a CAM2 model here, fair value gap. Now you can go along again. So often I've seen this, you get a tap into this. If it runs through here and it closes here, that's where you get out, because there's no more CAM3 in here, there's just CAM2. So where that candle closes, it either runs your stop loss hard now, or you get an opportunity to take out. So see how it reacts off of this. Well, this is a 5-minute candle. We're going to get down to the 1 minute, and so that right there is your line in the sand on the 5 minute. Your stop's going to get taken. You wish that you took your rejection block now, right? Didn't get your high. Come back and take your stop loss. So it would have been a dead trade for you. You would have actually taken a loss versus a take profits at rejection blocks, my friends. Now we've run the liquidity on the downside. So this was manipulation. Back into old low. Continuation on the downside. We're still looking for this liquidity down here. And still there's a ton of liquidity up here. Pokes are just runs on liquidity. And if they pull back into the range again, this is the bottom of the hour, 9:30. I do like turtle soup here. Let's go back into the 1 minute. I do like the 1 minute. We're probably, looks like we may be running on this before we come back up into here. see what kind of support we get off this daily here. We'll see what the 10 o'clock shows us, but this looks like a turtle soup to me. Equal lows, manipulation. Run back, take out the lows, both sides, and start driving it back up again. I don't want to marry the idea, because we still have all this liquidity down here. So if this is just consolidation with the leg that takes out consolidation, this would be a cam 1, 2, and then the 3 model leg takeout. So this would be a cam 1 reverse. So instead of this being the tap down, get your 1, this was your 1 to here on that direction. When it starts to blow through it, look for this to be your cam 1 model entry here. 2 would be inside here, right up to here, and then 3 would be whatever that leg is there, half, 50% of that, back to that order block. So this could be an entry right off this fair value gap here, old low. What's 50% of that leg? I have to work on that. That was messy. I was working on fib tools this weekend too. So 50% will put you in a fill right here. So I'm going to do a cam model just because we can. And the stop loss will go right here. Even if those are equal highs, we'll do a cam 3. So if it closes, the body closes below this, that or above this, then that fair value gap, sorry, that stop loss, that's my fail-safe if it just rips through me, but it's going to be closed hopefully long before. We'll see if this gets taken here. So I've closed above it. And I'm out. So long before that gets taken out, that was the break-even opportunity right there. So that's the fail-safe. A fail-safe example of whether or not that's going to go higher. We have trade, a body goes above it, trades back, gives you an opportunity to get out of your trade at neutral, and we get to watch it go up. So that was the hand, the sign that tells me it's going to go higher. But if you did catch that, and what I wait for here is for the fail-safe. If the body closes above it, my rule is get out. So as soon as it trades down, if it trades down, I just keep going, okay, I'll let you keep coming back down. If you want to give me some profit, I'll take some profit. And as soon as you come back to, so my lines start changing from that right there. If it opens and comes back and taps that, that'll be my out before that. If this opens and drops down, there's a potential to get out there, and I watch it. I wait. If it starts to pull back one more time, I'm out. Or it touches the opening again, I'm out. So, no, this could just turn around, come all the way back down and say, well, there's your rejection block again. But it's just too small here. I think it's probably going to take them out. So that's a good time to be, it's okay to be wrong. Zero stress, you know, 20 bucks, 60 bucks on a 100K account. That's nothing, right? So continue with the original idea of coming back up into this fair value gap here. We've broken a body below here. We've come back up inside. We actually took the high out, so I would like to see it come back and start new and then come back down. So that's the objective for today for me. 181.06 for the upside. So right back up into this fair value gap here. And if you see this low was swung, we did that low, and the same kind of reversal pattern I showed you earlier, right here. So we've got a body traded above it. We've tapped down into it now. Now you can get long on that. So if it comes back down into here one more time, I'll do the same thing on this side. I'll go long, and if it trades below me in this inversion with a close, then it tells me we're running deeper, and then I'm going to use my same rule that I got out here to get out here. So if it does come back into me, I want the discount array. I definitely want that as a discount price to go higher. If I don't get that, then I'll just close the trade. Price is going to come to me. I'm not going to chase it. Anyway, let's look at what people have been saying. Good morning. Holy smokes, there's been some... Geez, I'm missing people here. Good morning. Christian, good morning. Me as well, Darren. I did, thanks. So you had a great weekend. I'm glad. You and Kitty had a good week. I'm off today, so no cheating to trade. You're off today. All right. Wow, Thomas, you have a great day, my friend. Dave, good morning. Young, good morning. Tristan, Anas, good morning. Buenos dias, my friend Victor. Buenos dias. John, good morning, John. Laurie's here. The whole gang's here today. We got Lambo. Good morning, my friend. How are you? Spartan Berry, happy Monday. Look at all you chipper people this morning. This is awesome. Smooth equal lows below are the target. Boom. Yes, indeed. Hit those. Young, we have sell side liquidity below. Yes. Morning, Derek. Oh, the whole gang's here this morning. We got Kitty. Husband and wife team. Man, we're unstoppable today. So this was just a false run up, run down, turtle soup below those lows. We're looking for a retracement back into here. Take a look at the 4-hour chart. We have the daily fair value gap low, or daily fair value gap below the relatively equal lows at 50% of the daily fair value gap. On the 4-hour, oh yeah, there's a ton of liquidity down there. We just ran this out here. We just popped below it. So to me, it's a great opportunity to run that liquidity now up into a premium level. There's a little fair value gap above us here at this breaker, because that now becomes a breaker. Now you've taken these lows out, so that becomes a senior candle now and a fair value gap. So fair value gap breaker, key off of that, which is the 50% of the range we were looking for, with a slight bump above. That actually ties in nice. Thanks, Lambo. That's a really nice opportunity to get in there at that level, and then come down and start taking out the rest of this stuff down below us here. So I'd like to see this come down one more time, trip us in, give us a ride up to the bus stop. I'll take off here. I'm fine with that. Not running for super equal highs there. We've already cleaned them out with that candle there. We've cleaned out, so we just wicked above that high to this low. And then we have a whole pool of liquidity. Look at the equal lows down in here. This looks great, and the fair value gap below us. So I'd like to see that stop on here, hold up, come back up one more time, because the people that want to see this get taken out are delayed one more day, come back up into here. Monday sets the high, and then the rest of the week starts to run back down. So we'll see how today pans out. We're still in the middle between these two fair value gaps, so I'd like to see one of them tip their hat. Ideally, I want to see the one above give us this false run up in Monday, like a false sense that we're going to go take the prices higher and then turn around right here and just start slamming it down for the rest of the week into a big juicy week, and then a TGIF Friday back to 30%. How's that? It is written. I'm just gonna carve this in stone. There you go. It's carved in stone. That is my wishes for the week. He's saying even further back there, and look at all this lot. Oh yeah, there's all this cheddar down here on the daily we've been looking for. So lots of equal lows down here. Lots of little pockets of liquidity. But we want this to go back up here. I want people to go, come on, those equal lows, it's going to take those equal lows. Nah. It's just ran liquidity above here, and it's just quickly dropped it down, gathered up all these people who are a big pocket of liquidity sitting here. They're all looking for this to go long. They just went up, cleaned up these guys, and came back, just cleaned them up one more time, come back, offset at this breaker here, come back down, because you're in between these two. You can't say it's going to go either direction, but that would be an ideal setup for me to do. And I don't want to keep repeating it, otherwise I'm going to manifest inside my head that that's the only trade for today, and I don't want to do that. We may not get my entry, which is fine. So what we're looking for here on this entry right here was right here. I didn't see it. I was looking for the 50% run here and trying to catch that one for a run down. I didn't catch the fact that, oh, wait a second, you just ran the lows, created your fair value gap, you got a body traded above it, you tap into it, and off you go. This kind of, I like this, kind of sit here for a bit, maybe give one more little dip down. I'm hopeful. What's that in terms of the liquidity range, if that's the high and the low? Well, 50% puts me back in here. I'm not out of the race yet. This could bring us 50%. Just dip into here. Catch a 50, 62%. What's 62% of that? Oh yes, look at that. Lines up right on the beezer. Fill. Alright, well, I'm going to leave that sit there. And I want to put the stop loss right down in here. I don't want to see this get below 50% of that wick. I'm just looking at come on, get to the end. Oh my goodness. Look at Bitcoin. Bitcoin's doing the same thing. Here's a great example of the same thing. Here's Bitcoin. See this here? This is what I was doing all weekend. That's why I was able to push it up 20K on the weekend. Is right here. It's not this account, by the way. I'll show you. So I think I'm on bullshit. Yeah. Where's my other one? Bitcoin. Where's my Bitcoin one? Where's my Bitcoin one? I'll find it for you. It's 160, not 113. So anyway, here's the setup. We run above the old high. There's the fair value gap that you're looking for when you run above an old high. Stop loss will go up here. You run below it with a body right here. Boof. Came down, come back up. We tap it here once. Because your midpoint one, you got the high one, you got a little bit of a squeeze, and then kaboom. Running for these lows. Back into consolidation again. So that right there is your setup, folks. It's a beautiful little setup. Absolutely beautiful. Same thing here. See this one? You ran this low, creates a fair value gap right here. We trade above it right here. You trade back into it. Look at that. Right there. And then you run for the highs. Delicious. Fair value gap. This one, oh, you'd have to say that high there gets taken right here. Body trades below it. You don't get quite back into it before the big hammer down. But anyway, you get to see those. They're super, super fun. And let's go back to here. See, we tapped into it again. I wanted this, but we've tapped into it one more time. So if it leaves from here, you know, it can do that, leave that open as a breakaway. I'm all right with that too. It's got to come right to me though. It's got to come right to me. Where is my... There you go. Just want to make sure you 158.55, and these are the trades I was taking on the weekend or yesterday. This is the 10th. There's like 24 of them yesterday. Right up to there. Anyway, I will share those with you guys as well, just so you can see all the different entries I was taking. And they were just a matter of just waiting for these 1 minute setups to happen, and sometimes trading cam models and experimenting with some returning to order block stuff. But these ones were just awesome for trades. You put a 50 lot down on that with a short tight stop loss that you're only risking 1 to 2% of your account, then you get some awesome payoffs when they start to rip away from you. And there's some amazing tight entries you can get on this. Anyway, just so you can think I was bullshitting you. Oh, here we go. Now we're finally tripped in. Now we don't have a run above an old high with a little fair value gap forming in there. Oh yeah, we do right here. We trade below it, come back up inside, stop losses here. So we're going to watch and see if we get a body trade below that level there. So that's where I'm going to kind of keep my eye on this piece here. See where that closes. Imbalance, there is a small imbalance in there. You see that? So 3, 2, 1. Now definitely got to wait for this to get back there. If it closes below there again, I'm out. I'm out. Oops, shit. I'm out. Closed the wrong one. So now it's got more downside for me. So you get to see an opportunity to see what that fail-safe is like. So it saves my stop loss. And we have this overlapping one that goes above and one that goes below. When they overlap like this when you get into these consolidations, you can get beat up pretty good. I didn't see that till I came back and was like, oh, there's still, oh yes, there is one right there. So look for run on rejection block. And just that little trade, see how it just trade even with flat with it there? You're going, ugh, not good. Body finally trades below. Now I want to get out. If it comes back, that's great, but if it drops through here again, I'm out. So you save yourself the distance between there and there. Now if this turns around and goes all the way back up again, the stop loss is there. And those of you who like to hold right to the wire and trust this array over this array, good on you. Not me. That's my fail-safe and I have to stick with it. So if it runs away on me now, I go, oh, stop loss was right there. Should have left it alone. Nope. Gonna act on what I saw right there. So if this comes all the way up to here, rolls over and comes back down again, then I could have broke even there. I want you to see the strengths and weaknesses of my idea of my failsafe. So if you're here and you go, I'm gonna wait for it to come. I'm either gonna wait for it to come back to me so I can get out, or I'll let it take my stop loss. I won't do this finicky fart around thing that Darren likes to do in here. That's fine. Then you'd be out. Even the mean threshold was taken out here. Thomas looking for an entry at 18,199. To go short, you mean it? Yeah, I like this up here. We'll see what we get here. Gonna wait for 10 o'clock, I guess. Dominic, good morning. Yeah, agreed. I'm hoping you're not going long at that point there, Thomas. Look at what's your purpose of going long here? Unless you're trying to get above it and come back, find some support at it to go long. Then I could say, yeah, it might be a little inversion you want to get on top of to go above this breaker. But it's a senior candle with an inversion, higher time frame senior array in a premium. You got overlapping confluences, so if you're aiming for that, you'd want to go get a discount to go there. So you're looking for your setup to go for that range, which is what we're looking for here. didn't work. So now we'll wait for another little. Are we going to run? I wouldn't want to see that take the lows out just yet. But if it does, before 10 o'clock, oh, it's almost 10 o'clock now. So if this takes this liquidity out here, then you can go for a run up there. Like just hit the mean threshold, turn around and come all the way back up into here, then come back down for the rest of the week. Let's wait and see. So that was 2 candles. Ideally I would like to have seen this candle come after this candle right here and then come back up and get me out. But just that candle alone is all it needed to get me out. Which in the end worked, because the failsafe would have. So now we've got a low taken out. We've got a fair value gap. If we get on top of this one, it's the same rinse and repeat as we just had. Low taken out with a body. Fair value gap formed. If we get on top of that, find some support of that, start running for these highs. I'll do the same setup again, rinse and repeat. My limit order to 18,194 for a long. Okay. Yeah, you're buying your long at a premium. I'm not sure I understand your logic to it, but I fully support your trade. If that's your logic, you might have a logic in there I'm not seeing. So I wish you the best of luck there. Okay, here's this valid order block here now. We got 10 o'clock. I'd like to see this turn into one of those island reversal patterns, like this kind of thing here. Equal. I see a big bold candle go above here, stop, come back. That's the silver bullet for a long. Again, I keep trying to marry the idea that we're coming back up here. We may be heading here. I could just see the algo going, I'm going to stall it right before it takes that out and frustrate the hell out of retail people. Or the retail thinks, hey man, this is a solid foundation of floor. I can get on this to go long, go higher, or just dip into the mean threshold of that, clean them out, and run higher. Because that will come back to a fill right there, 17,797. Yeah, we're still not running above here, so we're bearish still. And if you like your silver bullets, there's 10 o'clock. Return into this guy here. I'm not crazy about that. I like the wick forming in the first 15 minutes or first 10 minutes or so. Then after that, I like to make my run. So I'd like to see this really push through here now and create a BTC right through that. So if this is your silver bullet, you better have taken out at your quick low for some 10 handles. Another opportunity there. I'm just telling you these different things that I'm seeing. Not that I would trade these. I'm just going by pure definition. So my wife has made it to work. Now coming right down, those who are getting your silver bullet off of this, for a rundown. I'd like to see you guys get some money. Come all the way down into your rejection block. Maybe take these lows out. Still bearish. Oh, and there's a nice setup happening on Bitcoin right now. See this Bitcoin one? I'm up $3,000 already. So looking for higher prices. There's the swing point. So just gonna look at that one on Bitcoin. It's still come down quite a bit. So don't just take that as it's the gospel right now. I'm going to align that one a little further down. Good morning. Should we trade in Merc contract or June? You know what? You're right. We should go to the June contracts. Good for you. Thanks for reminding me about that. Where's the June contracts? That's March. Let's go. Thank you. Where is the June? June's right here. Okay. Let's do this. We'll go to our plus. Oops. We'll go to our commodities. We'll go to indices. We'll go here. Oops. Crap. I'm doing this all backwards, sorry. Thank you. We want to go to here. We're going to go here. I want to go plus. That's good. Now we got March. Not March. June. Let's get rid of this one. March. This will be June. Oh, that's just the futures. This is the one I want for June. Gotcha. Thanks for that, Simon. Thank you, Sam. Thank you. Reminding me for that. If you're in Bitcoin, you should have closed out right at that breaker there for muchos thousands of dollars. I closed out of that. Now I want to try and get right in on a low on that, which I don't think I'm going to get now. I think it's but that's what I mean. You catch these bomber trades on Bitcoin, and you can catch some good money there. I'm using June D. That 50% of the data figure out was also the last week's low. Ah, nice. Go daily. So he's banging around off a consolidation here. Still haven't seen anything big for a setup yet. Might have to wait till 10:30 or something. I might have to spend a day just trading Bitcoin. It's just been it's bouncing off the midpoint of the senior array there, and Bitcoin's sitting right up in here. There's your swing point, taking out lows, inversion, entry, popped above, enter in, go long, breaker, scale out. Now run up here, premium array, up top. I'm not still in that trade. If I was still in there, that'd be like, I think it was $30,000 to there. Right there would be 30K or something like that. 34,000, I think it was I was looking for. Wouldn't that be awesome if we could make $34,000 in a matter of 7 minutes? Whatever my entry was down here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes. Get paid like Tiger Woods there. 10 minutes, 30 grand. There you go. Well. I think that would have almost put me over my double my account just over a week. Anyway, let's get back over here. I'll tell you, that Bitcoin's just an awesome place to go collect some ducats. I'm thinking I'm gonna have to do, these all have to be, okay, I gotta get this right this time so I don't muck it about. Indices, ES, we'll delete ES, and then we'll add ES, June contracts, right here, plus, thank you. Then we'll go here and say ES, bingo, June, lovely, bit of June, lovely bit of June. Let's go over here to my little Yammy friend. Do the same thing with Yam. Get rid of him. Oh, no. Get it right there. Bit of Yam. YM. Oh. Bit of June. Lovely. June. And June. Right, we're all done. Oh my goodness, that Bitcoin just ran the high there. Oh, what a luscious trade that was. Did anybody take a Bitcoin trade there? Oh, excuse me. That one came. I couldn't get my clicker, my volume turned off fast enough for that. Good morning, folks. Tesla, how are you? That was your current silver bullet. That's to go short. Yeah, I'm not convinced we're going short. I'd like to see this kind of hold up here and just start booking her north. I agree with you, still not sure about rolling over to June. Open interest is still highest in March. Is there a big difference between... Are you still in March's contract, Derek? Abs, are you still in March contract as well? And does it look a lot different than this? Cam 1 incoming. Dave's all over those cam models now. Yes, indeed, right here. I'll even split the difference. I'll even go in here with you, Dave. Stop loss would go down here. Take profit running for our old highs, or this high, depending if they take that out first. So go to a premium array up in here, this breaker. Or follow it up. We'll see if we can follow it up there. Now be careful, because if this one turns into more than 50%, we lose more than 50% of that on a close, then this is the false leg up for a run down. So if that'll be a cam 3 entry. You got your cam 1 would be from the bottom, cam 2 would be in the middle, cam 3 would be the leg that takes out the high, 50% of that. So that is a cam 1 there. I want the body, because there's a fair value gap sitting down here, so I want the body of that. Like that. No, you don't want to see this run all the way through here. Cam 3, or 2 I should say here. Whatever 50% of that is. So it's right here, right on inside that, inside this fair value gap here. Watch with the 10 seconds. Closes. It's closing below. Oops. If it comes down below that piece again, I'm out. Comes back to my thing. Right. I'll close out there. So this should go down lower. If it doesn't, it goes back up. Oh, okay. That's my cam 2 model fail right there. 50%. We close below it. Come back up. Too short of my edge, so zero wash. So there's 2 examples this morning of how that little fail-safe can save you if you're wrong in your cam models. Believe me, if you're right, you're catching max profits there, boy. But that's again, that's just my fail-safe for protecting my if I think that's definitely going to close more than 50%, then we're going to run the lows. Now you've got this cam model here. So this leg that takes out these highs, it's either the one that comes to give you the run back up, or it becomes the cam 3 model you're looking for if it takes the low side out. Prices are different. Thanks. I took the failsafe as well. Good. Now if it trades back against us, I don't care. It's not my setup. Because you've seen many examples where CAM models that come down to a precision entry like that, and you get long on it. That's what you're looking for. You don't want this sloppy stuff. You want a decent CAM model. So open interest provides strength on price moves from large commercial traders. I go with open interest. Yes, prices are different. Okay, then I'm going to stick with the March contracts for a little bit then. Oh no, that's CME. Let me add in I'll stick with March if open interest is still that high. March. Oh, I just had it off. I just had there's a CAM 3 model that just happened here on Bitcoin. Same setup, took out the highs. CAM 1, CAM 2, there's a CAM 3 right there. I got the first two, didn't get the third one. My stop was, or my entry was right there on that, so it just missed my entry for a CAM 3. Sorry, let me move you back here. It's just sloppy here. What do we got in the ES? Doesn't look much of a silver bullet going on in here. This 10 o'clock one, your stop was taken. The 10:17 one, stop's not taken just yet. So we're looking for that setup happening up there at the 4 hour. Oops. Let me go back to that. Our 4 hour here. We really didn't sweep a low for our setup. So I'm looking for that. Patiently waiting now for that setup to occur right here. We get that there, and we see that setup that we've been looking for, that swing high with the fair value gap on this side, and break through it, pop back into it, stop loss tight, look for a fail-safe model. That's what you wait for. Well, not what you wait for, whatever you like, but that'll be the model I'll be looking for. Thanks for that, Abs and Derek, for the futures contract. Open interest, always going to stick with the one with the highest open interest for sure. Until there's a shift, go where the interest is. We're eating through that order block now. That would be your big juicy consolidation there now, I guess. 50% of that. I guess you'd have to look more like a 5-minute consolidation. Look for a return to that old high right there. Maybe it was this one. Oh, I didn't save my templates. 1011 inversion fair value gap. This little guy here, well, you found support at it here, then you dropped through it here, came back, found reverse support, so that's bearish if you're using that guy. Then you popped up above him, you got all the way through him, came back inside and just tapped him one more time right there before leaving. But you also have this fair value gap here, a premium array. You gotta let, yeah, I'd want to see the premium, not a discount, provide you the support. If you get above an inversion on a premium level, then to me that's more bullish than getting above an inversion on a discount, you know, because then it's just probably running up to a premium array. So I like to see if you're going to use these inversions and there's a bunch of them like this and you want to get out of a range, then use those as your linchpins. So it's got to get above this guy to go higher, it's got to get below this guy to go lower. It gets more support from me as a senior array as an inversion when it's in a discount and you're on the bottom end of it coming back to find support to go more further discount, and the premium is obviously vice versa. If you get above that and come back, find support in the premium array, there's nothing else above you other than the breakers. So if you get above that and you get you know, break it through the mean threshold and all that kind of stuff, then you say, yeah, I like that for an upside. And you're looking into the higher range now and saying, what array up here is supports price? Well, there's a one right here. So you go like array to like array, then you definitely have to consider if you're going from there. Let me just make sure that's a 1 minute. These are all called 1 minute. We'll call it fair value gap, reclaimed fair value gaps. They're not inversions. They're just reclaimed. Reclaim, reclaim, reclaim. We haven't gone through them and come back into them. That's what makes them inversions. We just a reclaimed fair value gap. So there's a difference in terms of how they're defined. So if you're going to look for the premium array right here, you want to see this guy right here, discount array. See how the body didn't close above it? It almost closed right on the opening and then took off on you. So there's the point that we're looking for it to come back to, hold high. If it leaves that open and leaves now, that's fine. Look for the next price leg up. So this is the one you want to see come back, find some support at this, and then start to leave. Otherwise, you're going to go, oh, which one's down here? Is this one? Does this one? Back inside that one. We have a bird, and that's a mitigation block. Coming back off mitigation now. Now if you go over the bottom of the mitigation, it brings you to the top of the inversion and still be okay. Does that make sense in terms of when you're looking at your inversions, how to classify your inversions in terms of their level of support for that trade idea? Just make sure you use the higher PD array, one to provide your level of support. And if you've got several inside a range and you want to go higher or lower, they're your linchpins for higher or for lower. If there's one in the middle, it's really sweet, because then you go, here's one here, there's one here, inside that range. So premium, I'll draw them all out for you so you get an idea what I mean. You got one little guy here, you got one little gal here, inside this range, premium, discount. Okay, so if you get above it and you want to come back, find some support at that and continue up. So if you did take this as a high, that's all the drawdown you had. If you took the mitigation block right off the top of the mitigation block, the body, you slammed it right in. Nice mean threshold. If that's your entry point, you were like almost nothing for a drawdown. Aim for a higher objective. That is your mitigation to mitigation. We did not break an old, I guess you could say that's a low swing. So it's a weak one for as far as I'm concerned. But I do like, if that's like array to like array, I'd get out a portion there in case it rolls over from here and comes back down again. Then you've got this array. We've already found support at it. We broke above, come back down, found support, come back up, found support at this one. Now we're kicking off of that. We're inside this array here and the discount array right here. So we have a small fair value gap here inside this smaller range we've now created from here to here. All you've got is mean threshold and that order block there. So either mean threshold is going to hold, inversion, hold, and then start driving back up again. Because these guys are overlapping, right? Take that guy there, move him through, and this guy here inside this range is probably still premium. I think the discount's probably going to be right on the bottom end of that. Let me see. Yeah, right there. Right near the bottom half of it. So if you come all the way back to 50%, keep your eye on that. We had our kitchen island tore out this weekend. This guy's quick, man. He tore out the island. He befuddled all the plumbing underneath there and installed all the cabinets already. Now we're just waiting for the countertop. He did it in a day and a half. The guy's awesome. So we're right back up, fill that fair value gap right there. See, it's all filled. Not quite 50%, but it filled the fair value gap. So we're looking at from premium to discount inside of a premium level. Like there's the 50% of the premium and discount. So if we said, right, wherever that 50% was sitting, we're in the discount portion of that to run back up. And there's nothing inside here to play with. You'd have to be down on a 15-second chart or a 5-second chart to see what's going on inside that range in terms of premium and discounts right now. So now you're running above the 50% line to get into your premium level. So it does this. It bangs around from premium to discount, premium to discount. You don't have to believe me. Just go into your charts and see. From the range that you're in, ask yourself, where are you? And do I want to trade in the opposite direction? If I want to trade in the opposite direction, I want me to get me a premium price and offload it at a discount price. So now I'm into the discount array. I'm below that 50% that we were talking about. So I went up into the premium of my premium, and now I'm down into the discount of my range here. Tap that order block one more time. Now you get to run out. So you're running out of order blocks now. So you got this guy here, that guy there. You've ran to the top once. You've run back down to here again. Now where are you going to go? Because now you've got this guy validated as an order block. You've already eaten through him. This guy here has been validated as an order block. You've eaten through him on the upside. So now this is where the algorithm goes, I got to get out of here. I'm running out of arrays, so now I've got to extend my range. And we're looking at a 1 minute chart, folks. Now it's got to get out of here. It can't sit here for much longer. Copano Moss. Copano Moss. I love that name. Copano Moss. It rolls off your tongue nicely. Copano Moss. Good morning, good morning. So I haven't got much for you this morning, Capano, but I tell you, Bitcoin's been paying some divvies this morning. I'm already back up to that. I was at 58. I think you guys saw 58 or 55. I think I showed you. It's up over 60 again now. Yeah, 66, 60-6, so 60% again. It's been giving some beautiful little entries. If you watch Bitcoin on the side there, you'll see that it's giving you that delicious little entry right here. Ran back up, tap in there, get long, take out those highs. We have this little reversal here, drops down below it. You come back inside. I loaded in there, one there, and one way up here, because I like the Cam 3 model, but I took the high and it literally hit the Cam 3 50% right there, and then hammered away. So if you went into Cam 1, Cam 2, Cam 3, it did not close a full candle above that, so it literally nailed the 50% of that leg that takes out this high. Hit it, Cam 3, and aim for your first objective. Second objective is to fill this here. Then your third objective is down here, if that's where you're going to go. So it's just paying some divvies right now. You just watch it. It's and I've never been a fan of crypto. Never been a fan of crypto. Never trusted it. But hey, look, man, if you're giving me setups that looks crisp and clean like that, hells yeah, I'm gonna snap it up. Still not faithful to crypto, but hey, man, if you're, it's better than sitting in this mess. $9.15 key levels and buy side liquidity. 18.55 sell side liquidity. 18.915 already taken. 18.915 18.915 18.915 that's way the hell up here. 18.915 is like right here. Oops. He's talking way up here. Well, he's got PD arrays he's looking for that I'm not looking for yet. That's not even on my radar yet. 18.9 is way up there. I'm not even looking at that. Man, if he calls that way up there, you catch that ride all the way up. I'm just trying to get out of this inversion right here. We're just waiting for this damn candles to their algorithm to finally pop out of this inversion right here. You want to see it get out of here? There. Finally, it's decided to make a little move. So give me a consolidation. Cam model 1 and 2 entry. I prefer the 2. If we close that above. Now you don't want to wick there. You don't want to wick because that just extends your consolidation range. Now what it's done, the algo said, I still don't know what I want to do, so I think I'll just take this little array here. I'll come back into the mean threshold of this higher candle. So remember we were talking about being between here and here. We came back up there, and now it says, okay, now I want to get back into my little range again. So either tap that and get out of there, like that. Good. Now start going. Lift off. Lovely, lovely. Carry on, lad. Carry on. Go on then, now. Go on, give it a lift. Give it a bit of a lift. Come on. Oh! You know what it's waiting for, don't you? We all know what it's waiting for. Oh yeah, baby. Some carrot. That's what it needs. A bit of carrot. A little bit of carotene. That's what it needs. Go on then. Have a little nibble. Go on, tuck in, mate. Tuck in. Oh, 17,915. Well, that makes a whole new different bit of difference, doesn't it? 17,915. 17,915. Oh yeah, okay, that's been taken. That's just this old high here, the daily fair value gap. Going in, look at that. It needs a bit of carrot. It's all it needed. Bit of motivation. All the people who are new are saying, what? When does the algorithm need carrots? We've determined, my friends, the algorithm loves carrots. All right, so we finally wicked above this high here. We've extended the range again. We're waiting for the algorithm to break out. Gave it a little bit of motivation. Now we're looking for more upside. So that little key off of there, return to, did not give us a breaker, did give us a mean, well, the word's slipping my head now. Not breaker, but mitigation block. So this mitigation block, here's an example where mitigation block, which is a weaker one of the two. If you compare mitigation to breaker, breakers are way stronger. It's a senior array. This is more like your midline piece. So not a queen or a king, but it certainly is a like a bishop or a rook, maybe, if you're looking at a chess piece. It's stronger than a regular pawn, but not as strong as the big ones, the big movers. I don't know why I go to my little chess analogy all of a sudden, but you got to look at the pieces, and when the pieces are strong and when they're weak. That's if it was. We have broken that high there, so it has to become a mitigation block. But if it was just a simple return to here, that makes it just a regular old boring candle. No, I guess from here, because we're looking for this to break the low and it doesn't, becomes mitigation. Yeah, it's always going to be a mitigation block. Until here, it's just going to be a regular old order block, until it makes a swing back and breaks the high of it, then it becomes mitigation. So here, all these candles down, it's just a regular old order block that we can trade back into. But the moment we create a swing point here and then break that high, then it becomes a mitigation. Let's move the carrot on up. Now, I like the idea of this guy right here. Even though it's in the premium array, and I got my upside objective there, if it returns back into this breaker here, I'll give it a go. I would prefer the New York Open though. That's right on top of the New York Open candle, so why not come back there, give us a kiss, and then end off. Come on in, give us a kiss. Bitcoin's doing nothing, going sideways. Oof. You guys have a good weekend this weekend? Did anybody watch the Oscars last night? I always think about that like it's the red carpet's basically a zoo where they bring out all the prize animals. We all get to stand back and snap pictures at them as they walk along. It's like watching a variety zoo. Ooh, I do like the large Quentin Tarantino gazelle. It does look impressive. Oh, look at the shiny coat on the Oprah today. Looks lovely. Oh, Michael's on a nice little chat on the channel today. Come on in, give us a kiss before you leave, love. Looking at a Cam 1 model in Bitcoin right now too. Oh, there she comes. Give us a bit of a kiss. Go on in, love. Head off to work. Look at the range we got here. This would be a discount, obviously. Back to mitigation. Stay inside that breaker. And that breaker will still give us the fair value gap if that's fuel fancy. Now I'm going to stick that right up there. I'm going to leave that alone. I promise I will leave it alone today. As soon as I break that high, I'll move up to break even And I'll leave it alone, and I'll see if we can make it up to our objective for today. Oh, sugar. Michael just said something about open interest in March. When that drops to 50%, then he's going to switch over to June. Okay, I have a zero stress trade in Bitcoin live. I have a CAM 2 model and a CAM 1 model in Bitcoin right now. I got in on this one here for a CAM model. So this is zero stress trade. Well, that one paid good. Took the high. I'm out of that one. All right, this could be a reversal here. This is not looking good. I'm out of that one. This one here. I'm out of this one. We have a high broken here. Now I'm looking for this. We have a high broken with a fair value gap. We're turning back up into here. I'll get short on this now. I'm just short. And like I said before, I'm willing to change my mind if I find something that supports us. So see how we have a body go ripping through this? And we've cleaned out these highs. So this is the inversion set up to go short. And if I'm wrong, my stop loss will go right here. So I took 0 hit on that. Looking to go long. And then if we close, unfortunately, if we close above that, it'll take me out anyway. So I'm just looking for this to pop back in here. I do not want to see even a wick start ripping through this. At best, that. So this is a consolidation. It could be a cam model, it could be a reverse model, whatever one you so choose to use. Thanks. I just made $165, but I killed it because I was afraid. You know, if you're trading in fair simo, then go to demo, man. Wait until you see these setups and they start to work for you. If you're just trading off of mine, then you're going to become reliant on my trades. And as you can see, there's many times I will blow a trade. So don't rely on my trades. Read the price action and wait till you get something that is a very solid, you start to get confident in it because you've traded enough demo times to know that it's support for you, and then I get it. Run your, as soon as you start making you're into profit, look for where it could fail and move your fail-safe real quick. The moment your fail-safe becomes new, like for example, if this is my fail-safe, if this goes above this high here, we close above the high and we come back into it, then I'll get out as a neutral again. And the moment, let's say this went in here, right? We were anticipating this to happen, for it to come back down now. So that's why I got out of that trade. And let's say we get in here. Let's say that it came back, wicked up, took me in, and I started getting back down again. The moment it takes this little low here, this low out here, and we get on the other side of this inversion right here, I'd be like slam-o right to the top of this thing. So now it's zero stress. So if it comes back against you, who cares? You're zero stress. You want this thing to continue down now. It should have legs to keep going down. It should start busting through these fair value gaps. We're in the range now. You're in a discount. You start scaling out some money. So if you're afraid, start scaling out it here instead of worrying about losing your trade. You've got your fail-safe is kicked in right now. I'd be like slam to here, locking in profits on the way down. Right there, it starts taking out this rejection or this rejection block right here. I would be like zip. I'd take a piece off there as well. We've just broken through the downside of this. Nice comeback, find some support at it, continue pushing through. So I would be right here on my stop loss, and I'd be okay with that. Some people say, yeah, you trail your stop loss too fast. That's true. And that's easy for you to judge if you're on this candle looking back at that candle. But if this starts going down here, and I keep following this down, and then it finally comes back and taps me out and then takes off, you'll go, oh, it wasn't such a bad idea after all. It's just a strategy, whatever strategy you choose to use. So now we have a body. You don't want to get it back through here, right? So that's why I have your slam right up tight to this, because you don't want to see it blow through that. You want to see mean threshold or the bottom of it only. High, if it taps the high and you're just above it right there, and it turns around and goes back, that's a fail-safe, because as soon as it starts getting the body through that, then you've run these lows out and you're heading back up again. And what do we created here? We have a swing point below the lows, fair value gap, come back up, come back, find support at it, and start running back up into premium arrays. Richelieu, my Russian friend, how are you? Richelieu. Michael just answered our rollover. I have two things I read from that post. One, volume is higher now than June. Oh, when open interest of June is more than 50% of March, then he's going to shift over. Simo, thanks for explaining. You're very welcome, my friend. You're very, very welcome. That's what you want to see. That's what you want to see. Tippy tappy. Let's come down. A little tap dance. Tap tap. Let's go. You don't want to see that creative. See, just right there. You touch the top. No, it's not good. Don't start working through it. Your stop loss will be sitting right here. Okay, that would probably take you out right there. Now you see if that would have your fail-safe would work. I like this. We have a swing below the low. This is like the reversal, potential reversal pattern to happen. So wait for the body to get above here. Welcome any new people today. If you're new to our channel, thank you for popping by, spending some time with us today. I know you got some awesome people out there that are showing you the markets. I don't know how many are showing it minute by minute, but we're kind of watching every candle as it forms. We're kind of explaining the algorithm. Now you'll know, if we don't know what we're talking about, within a few minutes you'll figure out that we have no idea what we're talking about if we're counting a 1 minute chart. So keep your eyes on the prize. Oh, silver bullet time, it says. So that was just enough to take me out there if I was short on that. Still haven't broken above this, so we're still bearish, even though it did come back and take me out right there, right on the button. We're back to mean threshold. I don't know what that line was there for. Oh, it was this old high? No? Oh, was it right here? No, right there, inversion. I'm not sure. We'll see what this consolidation brings us now. Get rid of this out of the way. So far you're looking at discount array. This one's looking good. We're on the bottom half of it now. You want to see that provide support and continue rolling over, heading for this low here and digging down into a discount array on a larger range. We have this one here. In this range itself, we have this one. That's in a discount. Let me move these guys out of the way there now, because we don't really use those. So we're stuck between these two, bouncing off of them. And if we're looking at the, let me just get rid of this guy too. We'll go up here. We'll pull this range here to here. 50. Let's go to our fib tool. 62%. We're banging right off of 62% right here. Bodies are respecting that. This is that 10. Remember I was telling you about 11 o'clock? There's that 62% retracement back into the range that was created between 10 and 11. That's 62% right there. This was just an interesting day that it happened on, that's all. Okay, I'm going to ditch this one because I don't even know why I'm looking at that one now. So that's where we're at in the overall range. We're running out of arrays inside here now. We're basically inside this fair value, or inside this candle here, and you haven't really validated it. So this candle here validates by going above. That candle validates that by going below it. So you're literally in between these two candles. See how the algorithm's just bouncing around inside here now? It's running out. It's only got that high, that low. Sorry, that high, that low to play with. So it's into the rejection block. Rejection block. See how they just keep tapping rejection, rejection. Now it's like, all right, you got to make a move, buddy. Where are you going to go? You got this order block. Here's validated now. It's getting smaller and smaller. This candle hasn't been validated yet. If it pops below him, then you have overlapping candles again. Now on the 1 second chart, you'll probably find that there's enough PD arrays in there for it to bounce off of right now, premium and discount inside one wick. So you'll see this wick go up to the top of it and come back down to the bottom of it. That's on a 1 second chart. There's 60 candles inside there that they've created little ranges that they're bouncing off of as well. So you'll see it run up to the top, run down to the bottom, run up to the top, down to the bottom, inside the same candle. That's what's happening on the 1 second chart, bouncing around inside its premium and discount arrays. You just see it as a candle that bounces up and down here. See, it goes down, bounces back up. You go into the 1 second chart and you'll see all the PD arrays hit inside that 1 minute candle we're in right now. So we're waiting for the 1 minute to bust out of here. Scramble eggs! At least you have a kitchen. I don't even have a kitchen. I got a massive, massive island out there now. It's a crazy ass island out there. And it's hasn't got a countertop on it. So I can't use it yet. Doesn't have a sink, nothing. 18,233, you're looking to go short. 18,233, he says 18,233. You're going to go short way up here. Well, you're up in a PD array that's way above 233. You want to go short from up there. Yeah, I'm all for it, man. I'm game if you are. We've got to get up there first. Go long to that, then go short from there. That's what I say. We have a nice little consolidation happening here. This is beautiful. We have a CAM model. We have a CAM 1 and 2 models all setting up here. What do you want to see in your CAM model, people? These are nice, crisp, clean CAM models set up. I like this. This is looking good. So, what do you want to see? You want to see this even lows stay intact. Pop up, CAM 1, CAM 2, off you go. Or CAM 3 development. So we go consolidation, the leg that takes out the consolidation. So this would be the manipulation. Return to distribution. Come back down into CAM Model 1, CAM Model 2. Take the leg that makes the CAM Model 3. Stop losses all sit below that low, and off you go. How's that? So we're going to see how this thing forms up right here and wait and see on a 1 minute chart. It's at 18,188. Nope. 18,188. 18,188. Right there. Where are you at? Where are you at? You're at that little mean threshold, that little candle between there and there. You're looking for that low, that high, that mean threshold, the consequent encroachment of that last little bit of SIBI there. See, to me, you'd say, yeah, I'd like to go short there. I'm all for it too. I want to go short there, and I want to go short there, and I want to go short there. I want to go short all inside that thing. I'll even go short to the high of that. I'll even go short to the low of that. But I have to see the setup. I have to see a setup forming in here that says, now I'm bearish. And I'm bearish at a place where I'd expect to see price continue on the downside. And if you're going up, 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 and there's nothing to break on the other side here other than this just big candle, then you want to see a breakdown below, create a low, break that low again on the downside, come back into it, and then get short if you want to be ultra safe. So Simo, if you're really nervous about your trades, really wait for the ideal setup to occur before you consider venturing into that. We're between this mean threshold and this mean threshold now. And all of this has to be taken. This is not a leg down. So mean threshold of that candle. You want to see that hold price? Now a big wick down here, clean this out, right back into that little fair value gap sitting right there. And then a big leg back up again. Usually for the leg to form, you want to see a big bold arm get down there, then come back up through it. We want to see this, because we're breaking these lows here now, we want to see this thing here happen with here. We want to see a big bold candle down, small candle, fair value gap, trade back up through it, tap it, and then start running higher. That'll be my next one to go long. See, it's a good thing we got out of that short up there. And that tipped its hat right there. When it started showing that, we went, ooh, that's not looking good. Get out. Oh, you have different levels on your chart, Thomas. Okay, fair enough. Different brokers have different levels. I respect that. You're in the March contract. That's what I'm into. I'm still staying in March until the like Michael says, you get 50% of that open interest. Oh, it's like watching paint dry. Yeah, open interest for sure. I wonder how fast the when you hit the threshold, whether 50% is the threshold for open interest, that as soon as you hit it, watch how fast open interest drops after the 50% threshold is hit. Or do you have to hit 62% retracement? See, everything in life is a fib tool. When you hit 60% open interest off, we are going. You'll see a quick reversal. Everybody bails March contract and heads to June. The S&P 500. What do we got in? Well, we called it right in all the currencies today. We're calling it as a retracement, and it has been a retracement. So that's what we're called today. So it's all working out the way we expected it. Oh, I moved it. Oh, damn. That's what happens when you don't lock in your charts. Oops. Lock it in, lock it in. Done. D. So I'll look for that return to the order block here. And this, my friends, is a what? What do we call this big beast right here? So those of you who are in foreign currencies, I want you to watch right here, the top of this fair value gap inversion weekly. Watch for a run up to here off this candle right here. It may stop just short of that high. See that? This is a breaker, last down close candle before run above all these highs. Above that highs, those highs over there. This breaker is your next level of support. It's a senior candle inside a senior higher time frame candle or is a higher time frame PD array, and inside a higher, or the same level PD array daily. We have a daily inversion fair value gap, weekly inversion fair value gap inside a daily breaker right at the low. It has confluence between the mean threshold of the daily, look at that, mean threshold of the daily lining up with the high of the weekly, which is also the breaker of the daily, which is multiple confluences. So if I was a betting man, I would go right here, the low and the mean threshold of that candle and the high of this weekly inversion, leave that open, turn around and come back down. If it does go higher, so I'm looking for support off of that, look for a reversal situation happening in here. If it doesn't happen here and it keeps going up, no problem, look for this one. Do we get an inversion there? If not, look for this one. And if not, look for the high of the daily fair value gap right here. And to me, if you go through the mean threshold of that breaker, you could pop up here, just get your wick in that, and then drop down and close on a day below the mean threshold of that. If you break the mean threshold on the way up of that, then I'm less bearish overall and more short-term bullish back into this range. I'm just trying to look for more confluences that support. Yeah, look, 50% puts you right in the middle of that that little imbalance sitting right there. You're still inside the breaker. So if we get a really zealous run back up here and you get through this inversion, you want to see it wick up in here, come back down and close below this weekly. You don't want to see it get back on top of that. Otherwise, this could be the short-term swing heading back up into a breaker again up here. So you're looking for higher prices. And if you look carefully, this breaker here from its low to its high overlaps this breaker from its high to its low. They overlap each other. So there's many ways you can build this kind of thing. So I'm still expecting more upside, and I'm expecting that low, mean threshold, high, and that. Those are the key levels I'm looking for a turnaround. And if we don't, and we want to get those on a quick close, Monday, maybe Tuesday into here. Tuesday makes the high, then starts coming back down, and you get Wednesday, Thursday, Friday, and then a Friday pull back into the range like that. This would be really kind of a neat, because, oh yeah, look at this, look at this, look at this. I'm going to give you this price leg right here. Oh, wait, Derek gave me that little tool. My buddy Derek gave me the tool. Let me show you the tool. The pathway. Let me show you the pathway. So we're looking for a run to here. Then you're looking for a run down. Okay. Or you're looking for this kind of thing. You're looking for from here, run up to here, and then you're looking for this price leg from there to run down to here. I think that's where we're gonna, let's draw this and see. This is where you reverse engineer it. Watch. Did you see that, my friends? Did you see that? Even comes with sound effects. So if I was a betting man, if this is our next price leg down, look right here for some magic to begin. I'm going to go like this. That's how I kind of reverse engineer a trading opportunity. What say you folks? Does that sound like it makes sense to you? D, when you make a mistake and something moves on your chart, you can hit the undo. Oh, where's my undo button? Oh, the return. Undo the remove. Oh, thank you, Derek. Thank you, thank you. See, that's why I got my buddy Derek. He's got my back. My bro's got my back. Thanks, man. So with this run up, what's it going to do to all you Forex pairs? We're going to drive you right back into your range again. You got a discount array, so watch all these things here now on your daily charts. Let me get rid of that thing. We'll look at your range. You have 50% right there of that whole range that I've been in since last week. And we look for discount array, premium array, like array to like array. So you want to see this come down all the way down into here, all the way back up into here. Because there's nothing else in here except old highs and a breaker. Breaker gives us, oh yeah, right there. See that? Let me get rid of this candle. I'm going to get rid of that wick. See this here? 50% brings us right back into the breaker. This is the breaker right here. So we could come back to 50%. There's your next price leg up. So as the American dollar comes down today and then tomorrow makes its low, the low on Tuesday, into 50% of that range, back to breaker. Look for it to kick off the here. Ideally, I'd like to see, oh, here I go with my tool again, Derek. Buddy, I love the little tool. So we're seeing this little run down here like that to here, and then create the next price leg back up. And we shall see when we do this here to here to here, and then we go right here, and we go see if this lines up with anything in particular on a higher time frame premise. Look at that, right into inversion, mean threshold of that inversion right there. So that could be the next potential leg up if we come off that 50%. So look for Tuesday's low for British pound, euro, all those guys. Look for their lows to occur. Look for PD array for them to reach back in terms of the range you're in right now. Look for a premium and discount array, and look for something that would support look for an array that would support price around that level, which is the same as the Dixie's return to here. And if it doesn't, if it pulls off of there, then look at the price leg extending down beyond here, because then you have the little imbalance right here. So you go like array to like array. You see that down there? It hits the top of it, hits the top of it. Like to like. More confluences for me. I love it. I'm loving it. I'm loving it, my friends. I'm loving it. yeah, that's how I kind of reverse engineer where I think that's going to go. So we'll see if that pans out this week. Order block mean threshold right here. There's ooh. You see that right there? Do you see that? Do you see that right there, folks? Swing below the lows creates a fair value gap. Body trades above it, trade inside it. Stop loss is down here, comes back, hits it again, trades through it a little bit. Now we're back up to the upside. This may be the pivotal little run. This consolidation, price leg down, run back up. Nah, I don't even like that idea anymore. It's not clean, so ditch that idea. We haven't run above an old high, so skip this one. Man, if we come into this one more time right here, I take that. Jack Elms is a new fellow. And here's a fella you never call him in an airport. Hi, Jack. Can't you recognize search and destroy conditions and protect your capital? Yes, if you're in a search and destroy mission or there's a search and destroy situation, if you're trading inside a that's trading inside a consolidation strategy. And do you want me to show you how you can do that, Jack? Or are you asking me if I know how to? Or do you want me to show you how I would trade inside I'm not sure your question. Can't you recognize search and destroy conditions? Like this is a search and destroy condition? Yeah, it's trading inside a consolidation. It's taking out the highs, taking out the lows. But look at the range you're in. You're inside this candle now, and you're inside this candle. So you've come from there, premium to discount, mean threshold, back up into here. So you want to see either react off there and come back into this one, getting smaller and smaller, trading in a shorter condition. And then I'm going to trade from here to whatever order blocks above me. I'm trading internal consolidation. Now you may not like that. You may go, no, that sucks. It's a stupid way to trade, but that's not your way of trading. It's another different entry model. So now that we've broke this high, awesome. I look at this and I think, is this going to be a discount array now? This is building up for opening up a BTC here, back to a BTC here. Then I'll modify this because this will turn into a breaker. Now it'll become a senior array like that. It now becomes a senior array. So you're looking at the high-low, mean threshold, stop loss would go down here, and I wouldn't want to risk that doing another search and destroy. That becomes a senior array, inside inversion, fair value gap. So I'm all sexy for that now. That's how I recognize search or seek and destroy. I'm all right with seek and destroy missions or search and destroy. As long as you understand what PD arrays you're playing in, you can stay inside search and destroy missions. It's a consolidation trade. It's a whole new different strategy. It's not like the one you may be familiar with or comfortable with, but you got to know how to read the 1 minute chart in order to do that. And then you got to have your failsafe, using your inversions as failsafes. So for instance, you would move this to here. If it comes back into the breaker now, finds support. I expect, because it's a senior array, that if it does come back into a discount right here, that it's going to come back in, find some support off of this, and continue to the upside. If it starts to eat through this on a body and then comes back into it and goes through my mean threshold, I don't mind it wicking down in here, but if we have a body closed down in that, I don't like that. Then I'm out. I move to the sidelines because it'll come back, break me even, and I'll wait. I'll wait for another setup because I'm in a small, tight consolidation. if I can't get my run here to that order block, and now I'm in a range, so I would aim for a premium array, obviously. Remember that premium array I was talking about? I'd like to see a BTC form up there. Well, there you go. There's a BTC right there. Break an old high, come back inside. The higher it extends, the more that becomes a potential for a mid-candle equilibrium BTC, or equilibrium BTC. Then we get another setup of happening here for a short. So if I want to go long here and I want to aim for any of these highs, they're already taken, so you have to rethink, do I want to enter in here now? Is a new setup going to happen because it just broke this high? Are we getting a fair value gap forming in here? Wait for it. And if it does, then I've got this little inversion here that we broke through, come back inside to go long. It broke the highs, creates another little one of these in the reverse to come back down. Then we have a overlapping one, so you're in a tighter consolidation now. So we'll wait for this one to close. If that becomes the senior or the premium array and the discount array, we'll see if it starts to like get below this, come back to it, look for a run down into here. If it continues higher, then I'm all right with that. So now there's your next array that's formed. Close, order block. So now you want to see it start to get back into here. So ideally you want to see, now we can get rid of all this guy over here. We'll play with this one instead. So you want to see this provide a level of support now. Come back, find some support of this and take off. If it starts to eat through it, come back inside it, then we're looking for like array to like array. We're looking for a discount. Get back inside this guy and go higher. Or run to take these lows out. If this becomes the new one of these in the reverse direction, then you have to go bearish from this point. That's a seek and destroy. It ran out and cleaned out the liquidity on that side now. I'd like to see this create a nice little impulse leg or a propulsion candle here and just go. We're inside this fair value gap here right now. Look for support off this. Workout Warrior, good morning, my friend. You can get seek and destroy in consolidated markets where you just see it run above the high, the wick below the low, pull back into the range, wick above, and just keep taking out the highs and the lows back and forth inside consolidations. Unless you're looking at seek and destroy missions where they have big long rips through big long ranges. I'm not so good at finding those. I can usually see them in this, but that longer range seek and destroy is really no different than playing inside the consolidation. It's just a more stretched out consolidation. Same principles. Look for your higher PD arrays and your discount arrays. Or consolidation is one set of arrays to a consolidation in your discount array. And you're trading in between. Again, that's CAM theory. If you're trading your CAM models, consolidation, break above, come back, find support, push through, aim for next consolidation above you. You're trading this range in between the leg, as we call in paramedic school, the PR interval. The spread between your atria contracting and your ventricles contracting. I'm sorry folks, that's what you get when you get a paramedic looking at your ECG of your heart, of your pulse of your planet. I'm looking at your PR interval. So here's your return back into higher array consolidation. We did get our impulse or our propulsion candle return. We didn't quite get the tap on our inversion that we were looking for, but we did get the impulse. I keep calling it impulse. The propulsion candle for higher prices. We've broken this high now, so look for this inversion. We'll pull this guy over here now. See how we wicked above, come back down, found full support at the bottom of that. That's why we didn't touch this one. We found the support at the bottom of that one. So now look for support here. This is where you start to get that climbing principle. Where you climb above one, find some support on it, climb above the next one, find support at it, and keep climbing above these, going from discount to premium. And then wait for the next turn to come back into your range again. So I'll get rid of that idea now. We're looking for something to happen up here. Seek and destroy is totally relative. It depends on what you want to consider seek and destroy. A 1 second chart can show you seek and destroy. So there's the tap off of the inversion. And now you either want to run right from there all the way up, or we can dig down into those order blocks that are sitting in the mean threshold there. I sold NAS to the low and bought it at the gap as it came back up. Ah, nice. Good for you. It just happens. Always aim for that low-hanging fruit also. Search and destroy conditions on the 1 minute would give multiple opportunities on the lower time frames like 5 seconds or even the 1 second chart. Traded the 1 second and 5 second charts a few times. Of course you did. That does not surprise me. My firefighter friend, he likes to run into the burning flames. So there's your cam 1. Return to trading the PR interval. I know I do not want that to become a dialogue, so I won't mention that anymore. But anyway, that space in between one set of arrays, the next set of arrays, this is something I'm kind of looking at as something that's kind of interesting for when you see this range between consolidations getting tighter and tighter, then we can expect, I think, this is my theory, that we can expect reversals to happen. And then as they start to stretch out again, we start getting longer and longer, and now we'll start running for higher arrays. So that, what I'll think of as a PR interval, as they get longer and longer and they drop it and they take off, that's a type 2 heart block. Those are my medical students that are in here, my medical people. Classic type 2. Oh no, it'll be type 1, Winky Bach. Winky Bach. Not type 2. Classic type 2 is a block, a permanent block in between. Winky Bach, that's what it is. Geez, I've been out of the profession too long. I forgot what a bloody Winky Bach was. Okay, so you got consolidation here still. If you just traded this guy to that guy, that's your run right there. Off here to here. Small little run. But that's another one of those extensions that you start getting more advanced in your CAM model. There's much more advanced ways to work your CAM models. So as we said, come back into the order blocks, work in the mean threshold, work. Wicks do some damage, bodies are respecting it. Run above, come back, find support, get above this candle here. It's just a mitigation block. We don't break a low, it becomes mitigation when we swing back to it. Do we find support off of it and run back down? We've got a body, so we have a swing point. Yeah, Not a super strong one though, but that's the hallmark of we want to see this, and then we see a body get below that, come back up inside that to get short again back into here. If not, look at this. I know you guys saw this. Here's a fun one for you. Let's try this. Oops. What is that? Messy consolidation. What is in the middle there? One color. Oops. Oh, Derek says reverse it. How do we get that background off of there? That's what I want to know. Oh, I don't want a background. How's that? One, two, 2.5. And 4 puts us right up in here. Find support off that order block again, that SIBI again. Look for run up into here and the 2.5. 2 to 2.5. Keep your eyes on that. Hey D, whatever happened to the live weekend review? Was that a no-go? I had someone ask me about that yesterday, but we're in the middle of a tear down. They're tearing our kitchen apart here, putting a new island in there. So I had to keep running back to that. And I thought I don't want to be distracted and hearing all this banging and sawing going on in the background. It would just annoy the crap out of everybody and me, because he was drilling and banging. But hey, if people are interested in it, I'll set something up for a Sunday and we can do a small review. If you're interested, just give me a thumbs up in that cheap little thumbs up way that you like, that little like button at the bottom there. If we get more than 50 likes in the old thumb up button this weekend, I will do a review for you guys. We'll kind of do a live review. Do you want to do it on here? You want me to just go blabbing away? Would you guys want to have a little open discussion on Skype where you guys can actually talk and tell me what's on your mind, and we can have a little chats? It might be a bit noisy if everybody respects when whoever's talking not to say anything, and then just kind of pop your hand up and we can talk like a regular group of people. Otherwise, we can do the texts as well. It's up to you guys. Okay, we have a swing. We have back to breaker. Right on the money. Right on the money. Feel that last little bit of fair value gap there. Come on. We got a body above this swing. Come back up. Find a tippy-tappy on that. Get short. And this, is it not the... that's the New York Open, is it not? Yes, it is. It's the New York Open. So looking here for a tap and short. I'll even try it. How's that? We'll go tappy short. Tippy tappy short. Put a little stop loss up here. And we're going into lunch hour. Lunch hour takes out the 11 o'clock. Does not take out the 11 o'clock. Are we going to take out the 11 o'clock? So we're going to watch real carefully here. This is how you can protect your money. So let's get this really tight here. We'll watch. Oh, that was you asking. Okay, yeah. Oh, you got a different symbol there. Yeah, it was like F or something like that. It's not a the abs I'm used to seeing. It was F or something. But yeah, I'm keen. If you guys are keen, and then just let me know on the side there whether or not you guys want to do a open Skype chat where we get to talk, or if you want to do a you prefer to do a just same kind of setup where you just listen to me babble all the time, because I'd love to hear some of you guys tell me what you think. So there was the turn right there. Body broke below, come back up right to the top of where the body broke the low. Didn't quite give us the, look how short we were from getting in that. But did we see the reversal happen? Yeah, we did. And then you start scaling out all the way down here in pieces, and then go back to a discount array. You do that on Bitcoin, you're making bank. You're making some killer money on Bitcoin doing that. I'm not encouraging anybody to go trade Bitcoin or anything like that, but it's crazy. And I like Bitcoin on the weekend. I like it on the weekend. It really gives you some smooth. Not a lot of people are playing it during the week, right? So on the weekend, it seems to. And I don't know anything about Bitcoin. I really don't. I don't profess to know jack squat about Bitcoin, but I do know a nice little sweet setup in a Bitcoin when I see it. Trade back to the order block. See right there, perfectly. Mean threshold of the inversion, because now it's an inversion. When you trade below it, come back into it. Close below, tippy tappy, and run down. Run down to the top of the fair value gaps. Nope, didn't quite touch the fair value gap here yet. So premium and discount, what are we looking for? Zoom. Yeah, we could do Zoom. The only problem with Zoom is they kick you off after a half hour. And when have you ever heard me just chat for half an hour? Ain't likely. Zoom is designed for people like me. Shut me up after a half hour. So that's why I go with Skype, because Skype I can chat. We can extend past half an hour. Or we can just re-sign back onto Zoom if you prefer Zoom. I've got both. S. Wales. Darren, that would be awesome. I would definitely attend a live weekend session. Be careful going short. ES is putting on equal highs. It's trying to get to Friday's low. Yeah, just look at your range. So keep staying in the idea of the range that you're presently in. Where's 50%? Right there. So if you're going short up here, scale out 50%. Now I'm going to get out of this because we've already taken the 50%. We've probably taken 62% as well. Let me just double check that. Yes, right to 62%. And then back to the order block. Depends on your consolidation. If this is your consolidation with your model that takes out the consolidation from here to here, if that's the leg that takes the consolidation out, watch this. That's the leg that takes out the consolidation. Look where 50% puts you. Right back into here to go short again for here. So cam 1 all the way to there, cam 2 all the way into here, cam 3 up there. Stop loss is tight. So if you go into cam 3 right now, which is where I would, because I like that up there, be a tight stop loss. And like Wales was saying, your ES, whatever ES influence it has, be careful going short. ES is putting in equal highs. We shall see, my friend, whether or not this is the next price leg down. Check this one out. Keep your eyes on the prize. We have a discount array, premium array, discount array. We're still inside this inversion, so we want to see it get below that, come back, find support. Otherwise, we get bullish again the moment we get on top of it. We want to be in a... See, when you look at those premium and discounts arrays, right? So we take this guy here, we shuffle him all the way over. We have a little premium above, premium or discount below, and somewhere in the middle we have these little... This would be like a higher order discount, lower order premium. It's inside that range, so it's almost like we've got just trying to see how this works out here. If we do this in quarters, so we have a discount array and we have a higher order discount array. See what I'm saying? Is it's just close to the 50%. Then we have a premium array that's above, lower order premium, higher order premium array up here. It's in above the premium of the premium. I know that I'm not making much sense there, but hopefully someone can kind of get a gist of where my thinking was going. Still looking for a short down here and here, and see if this price leg continues down to here. It all changes up when we get back up on the other side of the premium to provide support to go higher, or if we get on the discount to go lower. If we get on the other side of this, then I'm really bearish again then. Yeah, that's for ICT. Zoom is alright. I want to know, I'm sure you've also heard how the all-time highs plus interest rates suggest the market should crash this year. No one knows for sure exactly. Say it does happen. What does that mean to you? What does it mean to me? It doesn't mean a heck of a lot to me. I'm already sitting in cash. I've already made my 10% return on my money for the year. Like on my live money, like all my life savings and stuff, that's all invested. I got my 10% for the year. That is taken care of, and it's all in sideline cash. I've got some dividends that still pay me a monthly dividend, and I have, like, if this was a stock that was paying me dividends and I was in down here and it broke that, I would close that out. No more. I wouldn't risk any more, just for the sake of dividends. I wouldn't risk that. The premium alone would pay me more than I'm losing in dividends. So I'm waiting for. I can wait for another year. I've collected my 10% this year. I've got 12 months now. I've bought myself time to weather this whole election stuff and still make some dividends on the sidelines. So if there is a big crash in the market, I've got a whole bunch of cash sitting there waiting for a reinvestment. And the cash is in a money fund that is guaranteed. It pays like 4.7% or something like that. So I'm not too worried about the even the cash is sitting there making almost 5% for the year. So until the interest rates get cut, it's relatively safe. It's like a dividends and interest that are gonna pay. So we got into a nice discount array here. See how this inversion here, we found some support at it. So now we want to see this swing point right here. We've broken a low. Not a significant low, but it's broken a low. Watch this now. We want to see this guy. Let me get rid of this. All you've got is that guy there. You've dug all the way down into a discount of this whole range. Optimum trade entry probably. Stand by. Optimum trade entry 62%. Into this near 70% optimum trade. Anywhere inside here is optimum trade entry for a long. We got a body not above here yet. Still wait and see. We're still bearish. Still bearish. Consolidation. Cam 1. Cam 1. So your first Cam 1 to discount. So Cam 1 to Cam 1, if this is your consolidation, from there to there, consolidation to consolidation, your Cam 1 entry here to exit here, you've got 1, 2, 3, 4, 5 minutes. You've made all that money from there to there. If you're trading a Cam model entry in that, Darren, you know what Darren likes to call that big interval in between here to here is really what you're working from one to the other, that section. So depending on how big that is, that's the money you want to make right in there, from there to there. That's your fair value gap, as it were. That makes sense. Hopefully that makes sense to you guys. So look for this to trade above here, for this to be a swing point. Get up on top of it with a body, not just a wick. 50% of that wick. Is it going to hold? And we're going to turn around and come back down. So you're waiting for 50% of this wick and a body to get above this. So you've hit 50% of the wick right there. You want to get a body above that. Turn that 50%, blow right through it, sit on top. 13 seconds. Didn't happen. 50% held. Minute by minute, folks. Minute by minute. Because in my mind, I'm thinking the bias will become much easier for a trader. What do you think? Hey, whatever direction the market wants to go in, up or down, I don't give a flying poop. I'm in. The best thing about trading it like this is you can trade both directions, up or down. You can even trade sideways if it's in a consolidation. What the market does in terms of volatility just gives you an opportunity to get in. That's all. Now, if you're trading stocks, different story. You're committed to one side of the market. You can't short a stock unless you have an account that allows you to short a stock. If you're trading options, you can do the same kind of thing, but there's a lot more volatility in options. If you have, I shouldn't say a lot more volatility. As long as you play your options the same way we're showing you how to set up and trade your 1 minute chart, and you're buying options today off of this, and you say, and if it comes back in here, I'm going to buy an option for a long, and I'm going to cover it down here. If I'm right, I'm going to go long. If I'm wrong, my short's going to go right there. So I'm only going to take a minimal loss for a long to a breaker. And when it gets to a certain point, you can start offloading your options positions. If you're just doing a call for a long, holding it long term, and you see it starting running up there, you just do these calls to longs all the time. Call to short. I don't know how much you'd make in a contract doing that. I traded options a couple of years ago, and it was fun to trade, but you got to wait for your money. This is turning your money over quicker, faster. There, right inside that inversion right there. Not an inversion, Darren. It's a price, a SIBI. That little price imbalance, right when that little thing we're looking for a reversal to happen, right there. Stop losses go here. Obviously, I've taken mine out now because we've already run these lows and we're already into a deep range. That's what I wanted to get into, to start scaling out, because if you're in here, then you use this, just your fib tool, to scale your position. So you scale out at 50, 62%, 70%, 79%, and you keep moving your stop loss behind it. That's how you scale out inside a fair value gap. Sorry, inside a range that is a short range. So if that was a consolidated range, that's how you would trade it, using your fib tool as your scale out tool. At least that's how I would anyway. So look for this to create our little swing point, and it's right at a time when it will do that. Now, you don't want to see this just create another little run up. We didn't get our price leg down that we were looking for, so we can toss that one out. You don't want a new one forming in here, though. If this was the trade I wanted to get short, which I'm not anymore. So you're looking at this array here and that array right there right now. You're between these two candles. And if it comes back to there, look for that high right there. Yeah, Capano, you're you don't be afraid of wherever the market goes, man. You hear about all these people, these doomsday speakers saying, "Oh, you know, it's going to crash." So yeah, good, let it crash. I'll catch it on the way down. But I feel bad for the people that are stuck in investing in stocks that know nothing about how to protect their stocks. You should have a fail-safe on every asset that you have in the market. Create a fail-safe. Don't just sit there and let it sit there and hope that the price will go up higher, which is what, I hate to say it, more than 50% of the people, I'll be conservative, more than 50% of the people who have money in the stock market are hoping that whoever's managing it is managing it well, that's going to save them, right? And how many of those managers have a fail-safe? Or do they just have a stop loss? It may be that the CPI tomorrow price isn't intending to go anywhere, just up and down for liquidity and imbalances within the current daily range. Yeah. Yeah. You can see this mark in time right here on a daily chart. Inside between these two fair value gaps, just coming up in here and just marching around until it finally busts out of one of them. Because now when you think about this range that we're in right now, we are in premium discount. This is the discount array. That's the premium array. We have a super discount down here. This is almost like equilibrium. Ooh, let's have a look at this. Let me just double check that. I don't want to give you guys false information here. This is a 4 hour. Let's go to the daily. %. See that? Premium array, discount array. Like array to like array. So if we end up running all the way down into here to grab this one, the next array to run back up to, which we've already, this one's been worked. See, this is already an inversion already. It's been worked both sides. So that's been worked inside there. This one hasn't. This one's still an open fair value gap. This one is a inversion. It's a little darker. It's an inversion fair value gap. So it's been worked. This guy hasn't yet. So this is a fair value gap. So the draw liquidity is down here. But because we're banging around between these two, now you see this. Now if I do this, watch what happens. Look where that 25% sits, right on the middle perfectly of the daily inversion fair value gap. So premium of the premium range, discount of the premium range. And we are right now in the discount of the premium. So if we run back up inside this and just pop into that we just run above to get our premium to run into our discount. You see that? Because we've come down, we've just tapped the discount of the big range. Now we're going to run back up into the just tapping above the premium of the premium range. Does that make sense? We just got below here, so like to like, and then come back down and drop right into the low potential. That's just a guess. But if I was an algorithm, that's what I would do. The DASA algorithm is what I would like to be known as if I was an algorithm. Got it, thanks. What is our illustrious Bitcoin doing? Nothing. Nothing. It's back into a premium inside a range right now. Oh, it's about to make a nice new price leg though. Look at this, it almost looks too clean in Bitcoin. Look at that. Here. Let's see if this one comes to fruition. They're going, yeah, Darren, 72,000, that's a whole new high. Bitcoin's busting out. You're seeing history. That's my next upside objective, where I think Bitcoin could be heading. We're going to see if this breaker holds price. If we lose that breaker, we're heading for here. Meanwhile, back to our regular scheduled program. Breaker, holding price. Looking for this guy here. Boom! And we hit it. Discount array, man. Now we gotta head back into this guy. You want to see this hold price now? Do. Premium on the big range, premium discount. Seeing as we've already run up, come back into this order block, ran back up into the premium. Now you're between this guy here and this guy here, so you've run all the way down to here. Now you're going to come all the way back up into upside order block. This is a breaker. We broke this high with this guy, so tippy tappy. Now it's like, okay, I got to start extending my arrays again. So you come back to here, breaker, breaker. What you gonna do? Come down to the bodies, the opens. See what you got. Then you got the three mean thresholds, and the mean thresholds, and then you got lows, and then you got runs up into the higher runs up here. This breaker up here. So does this give us a level of support? Turn around, come back up here. Smaller range that you're in here. If this one becomes the low. Fair value gap, where is that sitting? It's sitting just under equilibrium. So we could expect to see it come back up into there a little bit. And if we got a further downside, look for that leg there to continue down beyond this low, back into the mean threshold of this candle here. There's the pop-up. Mean threshold. Not a swing above an old high, so we can't use, I wouldn't use this as the inversion to go short, even though to me it looks like it wants to go short. Now that we got a little support off this breaker, if we start to eat through this breaker and we get to the other side of this guy, inversion, then I'm looking for that guy. Trading the range. And unfortunately, if we get above this guy, you're really between these two, and the range is too small for you to change or trade to even get excited about. So I just want to see this just roll over and come back down now for the next leg down. Look at that. I think that validated it, didn't it? Yes, it did. Nope. What's the high of that? 8625. 8650. It did break it. So you're really in here now. And now we've got a body that's starting to work above this inversion right here. So mean threshold. There's the body. Give me all three of them in one candle. Close it up off. Then what do we say? Your ass is next. So back to the breaker to breaker trading. This breaker didn't hold unless you add the two together. Then they're overlapping. Do a 2 minute with a 1 minute. That'd be crazy if it held right there, right at the top of that candle. But I like to mean the threshold of that guy. Are you going to hold? And then this inversion. So you're between here and this inversion. Senior array, overlapping now. Really tight little range. You're in relatively close to the equilibrium of that range. So dipping down into the inversion now. Get some support. And leave from here. Oh, okay. I reserve the right to change my mind. Right there. If we get through here on a close, we're back to, there you go. You're back to bearish again. You're still inside this guy here. Now that could run above, and you go, nope, now I'm bullish again. It goes below, nope, I'm bearish again. That's the linchpin inside the premium array of that run up. Are we going to get support off that to go higher, or are we going to get below it to run for the next array that I want to get below that to get bearish? So I don't want to just run back into a discount array to go higher. You want to get on top of this one, find more support on top of this array to go higher. So we trade below it, bearish, change your mind again, you go long. That's what happens when your consolidations and your overlapping arrays literally are changing your mind candle by candle. That's why you wait for it to extend it outside of a consolidation before you get excited about it. So you look at this and you go, I'm all right with that. Now it's banging around. It just tells me we've got a nice tight consolidation I can get a CAM 1-2 model off of. And if I was going to get a CAM 2 or a CAM 1, which one would I pick? Well, that's a breaker. So if we get a big bold candle like that, come back down to the breaker, get long on that. Take a CAM 1 from there. Or this is a breaker. That's a CAM 2 model. 1 or 2. Stop loss, I'd put my stop loss right below that. Not even down here. If that was the case, which isn't. But that's what I'd be looking for. There and there. And you put your 1% down here. If you add the two together, whatever they add up to 1% or 2%, whatever you want to risk in your account, goes down there. And then you have to say, what's my fail-safe? What would be your fail-safe there? Tell me in the comments what your fail-safe would be if you're a CAM model trader. If you're not, then I probably won't see any comments in there. I will be right back. I think this is going to be it for me for today. I like playing around inside the Bitcoin a little longer today. Mean threshold, see that one there? The range you're in right here. Mean threshold, holding price. You're in the premium portion of the premium part of the array. Now you want to see a big bold candle get above this so you can get it back into this consolidation here. If you're trading consolidation, and the leg in between is your profit, you see how this pretty much takes out your, there's your consolidation there. You trade it back to it here, and you run it out right there because you're back to this one already. So there's no real leg for you to play in here. Trading consolidation, they're practically, well, they're overlapping, right? If you take that high there, you can't trade that, so you have to trade a consolidation package. Yeah, I think I'm going to move to the sidelines, my friends. Keep an eye on this charts. We're still kind of looking for that elusive 4-hour puppy up here. I'd want to see something break us out here, though. I like this now. No, we haven't got it yet. Oh, yeah, we do. This is it right here. This would be a... you're inside lunch hour still, so below that low there. Take profit above here. It's already inside that range. I just wanted a really tight profit. Stop losses here. There's that inversion that we look for to trade back into to go long. That's it right there. You swing, you're looking for this, a body to come back and trade into it, right in here. So you got one, take that high, you got it again, take that high, you want to get it. Well, I hope it doesn't come back in there now. This is the one I want to keep, so that's the stop loss here. Because we have swung below this low with this here. When you're in a consolidation, this could be equal lows. So again, I don't want to see a body trade below here. If it does, that's my fail-safe to get out. And I wouldn't want to see this trade below this now. It's already done that damage down there, so I pull my stop loss even tighter. I don't want to see it get anywhere near this. You can play silly buggers with your wicks. Now you can leave, get out of dodge. As soon as it breaks that candle's high, I'll move it right to the bottom of that candle. right to the bottom of this one here, because I wouldn't want to see it come back and repeat that. And I want to see get some legs. So now you're starting to look at, I want some urgency here. If I don't get urgency, I'll get out because I'm in a consolidation anyway. So, no, I'm out. Let's just drop below. So that was a $5 loss. That's how you get out real quick. If you see that that's not working, shouldn't it drop below there again? I'm out. And that's close enough to my exit. I'll take it. So we expect to see it further dip down into that inversion there one more time. Clean out these lows. Do a stop run on the lows. Then you're waiting for the next setup to go long. So we're constantly looking for a time to go long for this. And how to get in on it real quick and then get out on it if it fails. So we've had 2 opportunities for fail-safes that have kicked off just lovely today and protected us quite well. Now the stop loss was here. Fail-safe was right there. Get out. Stop loss. If you're a stop loss, again, that's the rule. For me, yours may be, look man, the stop loss is there. I'm going to give it a chance. If it runs me out, I don't care. Well, now you're in profit, so good for you. You're in a consolidation as well. So order block, that's the upside candle. So if that rolls over now and comes back down, you'll be like, dang, why didn't I take it out at the next fair value gap? Discount, premium. And you're in consolidation, so you want to see it go. If you're in this, I want to see it take off. And I would slam that stop loss right up against break even right now. Just because I broke that candle's high. Yeah, I'm getting out. I'm done. So I will see you guys tomorrow. Thanks for popping in. Much love, much respect, and take good care of each other. Be kind to each other. Help each other out. I'm going to go and scrounge around the pantry, see if I can eat something that I can just boil on the stove. I have no countertops anymore. Anyway,